Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Nick Fusco, CEO of 8View, a pre-IPO stock secondary market pricing company at Evanco, and co-founder and Chief Operating Officer of Vincent.com. It's a media company focused on alternative investments. Okay, fellas, Revolut. So I heard the CEO of Revolut, which is like an online banking shop right out of Europe, but they're in a whole bunch of different countries, talk at this conference. It was recorded, right? And they announced that they're doing $2 billion in revenue with $350 million of net income. Okay, in 2023, they got 40 million customers. They're adding 1 million new customers a month. That's a lot, right? They're in 150 countries, which I got to be honest, I've ran financial services companies that started from scratch. Being in 150 different countries as a financial services company is nuts. And they're the number one downloaded finance app in 17 of those countries. So that's like quite a thing, right? So Nick, we were talking about the evaluation before we started the thing. So I have them at $21 billion. That's down 36% from their last round in July of 2021, which was 33 billion. So my math has them at a 10.5 revenue multiple right now, right? Which I think is low. So maybe that's the question. Like Nick, I'll throw it over to you first. Like you mentioned that you've, I think, used Revolut before, right? Or know the company from your time in London.
I
What do
love
you think?
I think it's great. Yeah.
So what was your experience? Like, how did you use it and everything?
So we use it today. We had Bank of America for a while. That was horrendous for us as a company. Moved off, and now we have Chase, JP Morgan Chase, and we have Revolut. And anything that's going in between countries, very, very seamless, really good fees, very, very competitive, and we're comfortable with the level of service every time that we're dealing with them. Can't say the same for one of the others I was on the phone with today. So okay. I think they're just making it really, really easy for interchange, which is definitely got to be a big proportion of their model, which I know Evan knows well. And yeah, when you're comparing them to some of the other neobanks, the multiple is higher, but I mean, for those growth rates that you're putting out there, it doesn't sound nuts. We love Revolut. We're not going anywhere away from them anytime soon as far as our company goes. So though jumping from about a 1 billion to a 2 billion in the course of a year sounds a bit wild.
Aggressive. Yeah, right.
Yeah, but if the CEO is speaking the truth, I mean, I'm thrilled for them.
Well, really, who knows? You know how this stuff is. Maybe that's like annualized run rate revenue. You know what I mean? Point in time, like it's the guy's talking at a conference, right? So, but anyway, that's where I got that number. But you're right, Nick. That's a lot of growth, right? You know what I mean? Just a very short period of time.
A double that had nothing to do with COVID, I mean, is outrageous, right?
Yeah.
So, and Nick, you're using them for business banking.
Correct. Well, wow, and personal as well. So
okay.
I've been using them for
quite a long time. You really like them. Wow. Yeah, we like these Revolut
guys.
Yeah. So Clint, what like fintech is kind of falling off, man. Like it's not the shine's come off fintech. It was the hot dot there for a long time, right? But what do you think about fintech kind of in general? You know, public or private, and then you look at a company like Revolut growing this fast with these kind of multiples. Is that interesting to you? Like, what do you think?
Yeah, it's definitely interesting to me. I mean, I always quote Mark Yusko when I talk about fintech just because it's hilarious. But he's like, literally, you have to go to a nursing home to find somebody to work on the technology that the financial infrastructure is built on top of, right? It's like Fortran. True. So ultimately, we need a massive infrastructure update on all things financial. So I'm a general optimist about fintech. And I think we got a huge lag that we got to make up in terms of growth there. As far as this company's concerned, if the growth rate's real, that is insane. And it's very compelling as a company. And anything that's global in nature, and these neobanks are really interesting because of the cost of infrastructure, but I'm not very familiar with their kind of infrastructure because, Nick, you said before we got on, they've been around for forever. So are they more of a traditional bank that's kind of layered on these features and kind of pivoted, or do they still have a lot of the infrastructure cost that a traditional bank would have, or are they truly like a newer neobank? That's my question. But the growth rate's insane, and yeah, you can justify the multiple just based on the growth.
And I
Right.
apologize that I do call them a neobank, but I don't think their technical classification is as a bank. But we'd put them in that category along with a lot of the other fintechs that are out there. Like we did compare them to Chime and N26 and quite a few others.
Yeah, I mean, Revolut's got. I think they do have a bank, Nick. I know it's not in the UK. They've been trying to get their license in the UK. They haven't got that, but I think they have one in one of the Eastern European countries. They have a
Got it.
banking charter there, like Lithuania or something, right? Don't hold me to that, but they haven't tried to do that in the US, at least not yet. But Evan, I know you have like some experience in fintech. Like, what do you think of Revolut? Is this a company that you find interesting, or like when you look across the spectrum of stuff that's private in the pre-IPO stock space, does this one stand out to you? Those other ones that you think are more interesting?
I would say it definitely stands out. If the growth rate that you mentioned is true, that's really eye-popping. But in a lot of ways, when I think about it more deeply, it does somewhat resonate, especially if they're branching into the business banking side. I mean, Revolut was launched many years ago as a consumer neobank, really focusing on improving customer NPS in the banking space. And they've done a great job of
Mm-hmm.
acquiring customers and growing really fast. But they're probably one of the first, I would say, digitally native banks that has really made the jump from both being consumer to also going into business. Here in the United
Mm-hmm.
States, we really haven't seen that sort of splash. Although Mercury recently, just I think it was a couple of weeks ago, recently launched their first like personal banking product as well, which is going
Right.
to be a subscription-based product. Here in the US, we've really seen like a very clear split between, or a delineation between those neobanks that service customers, the individuals, and those who service businesses. So if Revolut is going after the business banking side as a growth opportunity, that's really interesting because NPS for business banks has historically been bad. They
Right.
operate in a really large market that is highly regulated. Europe has a ton of challenging regulations, and if you've ever done business in Europe, everything related to paperwork takes forever. So if
Yep.
they're taking an opportunity to optimize that market, I think that's really really interesting and a huge market a huge market opportunity to make money in. Just on your specific question though around fintech, like I'm a little more pessimistic on it because I think that historically the financial services business has really been built on on charging ancillary fees for services like money movement or money custody or money management or advice.
Right.
And I think that with fintech, a lot of that, I'm going to call it infrastructure or effort to move money really is digitized and should be free. And I think a lot of customers believe that when they send a money from one person to another, or when they pay their bills, that should be free.
Right.
So it makes it really hard for fintech companies to monetize that in ways other than earning interest rate or charging advisory fees. So
Right.
I think for Revolut, going after the business customer is really a better market for them because businesses are used to paying fees. You're used to wire fees. They're used to other fees there. So it's probably a better market to make money in than the customer side, the consumer side.
Mm-hmm.
So I think it's pretty impressive for them.
Yeah, well, look, I like Revolut's that customer mix. Like Chime has a much more, I would call it lower net worth, lower income type customer base. Where I think Revolut, to Nick's point around FX and some of the other services that where they really add value is kind of unique, right? But Evan, I got to tell you, like I agree with you. I think it's hard for people who are deposit taking fintechs to really stand out, right? There are some
Mhm.
exceptions. I think Revolut's one of these, and it has to do with what Nick said. It's like around this FX and some of the unique items that they're solving for pain points, right? For customers primarily in Europe that have to deal with currency and money movement cross border and things of that nature, right? Which there's a lot of value to be added there. So I could see why people would want to pay fees to have a better experience, right?
Yeah, and the comfort around offshoring and how many different
Right.
currencies still exist. Not everyone's on the euro.
You're right. Yeah,
Definitely.
exactly.
Yeah.
Exactly. But the space where I think they're starting to get some fintechs, and they haven't really, I think, hit critical mass, at least not in my experience, or from what I'm seeing, is really around the lending side, right? So right before the COVID happened, there were some folks that were coming up in like mortgage, right? Around fintech, like kind of doing fintech, more like mortgage related type fintech solutions. I think that's interesting. Business loans, I think, is interesting, right? So that might be that I think is actually an easier space for a fintech to add value. It's more costly because it's harder. You got to get access to capital, right? So you can actually give the loan. But I think there's kind of a clear value proposition there. So my hope is that we'll see some folks there because I think you're right, Evan. I think people expect a lot of those bank deposit services to be free. So you got to
Definitely.
find another way to make money. And I think on the lending side of the portfolio is probably an easier path, right, to revenue. But all right, let's switch gears. Let's talk Wiz, right? So Wiz is a company I was not super familiar with, but it definitely hit my radar big time last week because they posted a $12 billion round. They raised $1 billion, $12 million post. So these guys are a New York City cloud security company. So if you're like, you have a business, you're using a cloud, you use Wiz to run security around that. Make sure you don't have any kind of critical errors or infrastructure issues. So A16 led, Lightspeed and Thrive also invested. They're doing $350 million in 2023 annual recurring revenue. So my math has that as a 34x revenue multiple, right? So I'm turning it over to my boy Clint Sorensen, who I know loves picks and shovels plays, and this I think kind of falls into that picks and shovels place. But Clint, like good, like really great company. Cybersecurity is hot, right? Like people like cybersecurity businesses, but 34x revenue seems high, like high to me. Like I don't. What's your take? What's your take on something like this?
I mean, the growth expectations have to be through the roof, right, to justify that type of revenue multiple. So I don't know much about their growth trajectory. Obviously, not on the inside. There don't have any kind of lens through that. But I think they would have to get the skilled investors that they're getting on this round at that multiple. There's got to be a significant runway to really high growth rates. And I can make the case for cybersecurity growth rates pretty easily when you start to just go down the rabbit hole of the amount of data centers being built, the amount of cloud providers, the amount of data that's going to be gobbled up, the speed with which the attacks are going to come into the system with AI, right? Because AI is not just going to be used by the quote unquote good guys. So when you start to really go down those rabbit holes, obviously cybersecurity is going to be a very important piece, plus this race for quantum computing, what that could do to everything, right?
Right.
From a cyber perspective. Yeah, this is going to be a fast changing industry, and I think it's going to be an exciting one. Doesn't sound too sexy. I think you put in our notes, is this a sexy industry? I was thinking, no, it's not exactly sexy, but I do think it's going to be a hot area going forward, right? It has to move synonymous with AI, in my opinion.
Right. Okay. So Nick, though, I was checking out these guys because naturally you see something hit, and the companies that I track, a $12 billion company, this is like the 20th largest company, I think, pre-IPO stock company globally now. Don't hold me to that. I'd have to go back and look at my research, but like, I don't know if this thing trades. Does this have? What are you seeing on 8View, man, through the data? Is there any kind of liquidity in Wiz in the secondary market?
All right, let's see. Put me on the spot. There is a bit, yes. So a mix of bids and offers, but one thing, if we go back even a year, we really didn't have any institutional size secondary from what I'm seeing, and I think a key point to hit on this is this thing came out of nowhere, as you're saying. They put this out in 2022 on their own website. They hit 100 million ARR in 18 months, becoming the fastest growing software company ever.
That's
so
wild.
This is Wiz beating out Deal, Ramp, Slack, and Twilio.
Wow.
So I mean, if you go to the Wiz.io website and pull that up, the chart is just straight vertical. So you can really get a sense of why you wouldn't see a ton of secondary a year ago. But additionally, with anything that had that dramatic of a growth rate, I would expect that we're not going to see a lot of secondary on the go forward basis either, unless it's really perpetuated by the VCs that are involved. I mean, there was a very short window of opportunity, let's say, of the last 36 months where the cap table is moving around a lot. So yeah, I would just say that's incredible growth, and this is maybe more like a tighter Zapier styled cap table, right? And you're not going to see as much going on there.
No, it's super interesting. I mean, this is where it's going to be interesting to see. Well, I've seen some stuff where companies shoot up like this, Nick, and there really wasn't a market, and then all of a sudden, I think the employees are like, "Oh my gosh, this stock is worth a lot of money on paper right now. Like, take some chips off the table, you know." So, like, I think that, and then all of a sudden, it's like, you know, around like this closes, you know what I mean, where it kind of it's a big uptick, and then naturally, it's like people start to want to sell because they've made their money effectively, right? So, It'd be interesting to see if it's this round or maybe the next round if some of that starts to happen. Where like the rumblings. I don't think the company's old enough though for them to be hitting the kind of like 10-year like option windows yet, right? I don't.
Oh,
I'd have to look
definitely
and
not.
see. Yeah.
No,
So it's
no. I mean,
too new.
if they put that out there in 2022, that means they're a 2020 company, and I think, and closing out 2022, they had like 143 million
Right.
ARR,
Right.
And now they're way beyond double. Like, let's go.
Yeah. I got you. All right. So Evan, let's hit
You know
you.
what's
I'm gonna
crazy,
hit
guys,
you.
on this? They say they have 40% of Fortune 100 companies are customers.
Yeah, that's a lot. It's impressive. Yeah, this is, I think, business to business play, cybersecurity. It's like, to Clint's point, it's only going to get bigger. Like these guys, this is going to be, they'll increase in valuation from here. I see the revenue. It's just 34x is a lot. Can we agree on that? I mean, Evan, 34x is a lot.
Yeah, I think the
Right?
multiple is a little bit eye popping for me. I don't know if I would even get comfortable with that. It is a very hot space. There is a lot of talent in it. There are big players in it. There are public companies in it. There are large unicorn private companies in the space. And to Clint's point, I believe that cybersecurity is just going to become more imperative for every technology company. One, on the regulation side, like it's becoming a requirement, whether it's GDPR or privacy policies and things like that. But at the same time, I also think that it's very competitive. I think that companies who are looking to cut expenses are probably cutting off or leaving some of the more expensive firms to go to Wiz. And if they're growing like a weed and they're getting into companies so quickly, I imagine there's other companies that are chasing right behind them that are going to look to copy their playbook and join them as well. So it will be competitive. I don't think unless, which I don't know the company very well, despite being in New York and having been in New York tech for over a decade, I don't really know the company very well. Unless they have some really, really, really amazing technology or IP that we are unaware of, I think that this is probably a little bit too expensive for my taste.
Yeah, it's going to be interesting. 34x. This is one I'll definitely have. I think I'm going to pick up research coverage on this now that they ticked 12 billion. So we'll probably talk more about it in the future, fellas. But all right, last topic. So Wayve just raised $1 billion. So this is in a UK company. They do AI autonomous driving. So this is not to be confused with Waymo, which is also autonomous driving, but with Google. I don't know why everybody needs to name their company with the WAY to start with in this space, but it sounds like that's a thing. So Wayve, UK company, AI autonomous driving. So here's my thing, fellas. Like, okay, like Evan, maybe we start with you. Would you let a car drive you right now? Just straight up. You get in the car, tell where to go, and then like fall asleep. Are you down for that?
I think it depends where. There are some factors, but yes, generally I'm comfortable with a self-driving car.
I don't know, man. I think I'll get there for sure. But I mean, has anyone driven in one of the Teslas now? Like this, what is it? FSD. I might be pronouncing this not appropriately, but the new like kind of full self. I think it's full self driving. FSD, the full self. Has anyone been in one of those and tried it out yet?
No, but I did the Waymo in San Francisco and I loved it.
Oh, you did?
Oh yeah.
Okay, what was that experience like? What was that like?
It was a bit of a holy shit. This thing's really doing it. And then you just got used to it. And I was in the car with two other people, so we were just chit chatting, and you just kind of forget, But okay. It's.
Was there a person there, or was it just the car? Just the car?
No, just us.
Wow.
It was really quite chill. Yeah.
And you felt safe? You felt like no problem, or you felt safe and everything?
We had zero problems. I will say I told that to a friend, and he said that he had issues merging onto a highway and then the thing starting to slowly back up. And he freaked out and had to call. And they were like, we're more than happy to refund you your $25. But I think he was on the verge of pissing his pants on that exact day.
Oh, I can imagine.
For me, it worked out great. So I think some of this is anecdotal, depends on who you're talking to. But I just really enjoyed it, and I would take it many times over, even hearing that story. Because you absolutely hear about having a horrible Uber driver, or a horrible yellow cab driver, and I felt just as safe with a brand new Jaguar driving me around town. That was fine. Yeah.
Yeah.
Right.
Yeah, Aaron, to your point, to your question, this is exactly the point I'm making. I think it depends where you're driving. Like, I would have a little bit more skepticism or concern driving on a highway where there's merging and lots of different cars or traffic. But in a city where there's stop signs and maybe the speed limit's like 30 to 40 miles per hour, I would feel a lot more comfortable. When I lived in San Francisco in 2016, there were autonomous cruise cars going around, and I took those to work pretty often. So it's been going on for a long time, but the training data and the center in which you can drive is relatively small, and cars are not going very fast. So I felt a lot more comfortable than trying to merge onto the 101.
That's fair
where
point.
I would probably have the same experience as Nick's friend.
Right. So, okay. So Clint, maybe we could turn more towards like an investment angle on this thing, right? So this company Wayve is software, right? They don't own cars. Like, like I think Uber is talking about like self-driving stuff. Obviously the drivers, they would have to probably own those cars. Tesla's, Musk is out talking about doing a cab, like a Tesla cab kind of thing, right? They would own the cars. I mean, they're a car company, so that's obvious, right? But like, Wayve is basically a software company. So they're going to have this technology that they could give to GM or to Ford or whoever. Like, where do you think it's interesting to play? Like, if you're an investor, you're looking at autonomous driving and you're like, hey, I think this is going to be a thing. I want to invest into it. Do you like the companies that are like a Tesla that's going to have like more of like like its own cab service, or like an Uber that would have its own car, or is it more of a technology play like this that you think is kind of a more interesting business?
You're going to kill me. I think it's the data. So I think ultimately the way I'd want to play it is who has the data. Just because you have software as a service, that doesn't mean you have a longevity as an organization. If you're not the top, I would say Tesla probably has the biggest moat in this category, because who knows how long they've been gathering data from all the different cameras and sensors in their vehicle. I doubt they set up these vehicles and with the intention of having self-driving cars down the road and haven't been gobbling up all the data. And then you start to think about all the other auto manufacturers and all the sensors and chips and cameras that are on these cars. They have to be gathering the data. If they're not, I feel bad for them, but that's the ultimate moat. So any kind of software as a service here, I think it's got a short runway. I wouldn't be a buyer of it. It might be great, but I just feel like eventually it's going to be the enterprise with the best access to ready data so that they can continue to learn and build automation.
Okay, that's cool. All right, well, listen, we'll keep our eye on Wayve. I mean, they did a $1 billion raise. They didn't announce what the valuation was, but the last valuation they had was 1.35 billion. So I have to imagine they're up in like $4 billion plus post money range at a minimum, right? So so we'll keep our eye on this one. But let's end it there, fellas. Anything else on your mind this week? Anything? These were the two big raises that I saw last week. But anything else? If you guys want to hit on it, just let me know.
Autonomous driving 6 months out. I think we got to hit on that again. I think
I love that.
That's poised for, such fast growth. And yeah, if you're just pouring money into companies like this right now, I think we're going to start to see results relatively quickly. So I'd
Nick,
love to come back to this one.
Nick, we're like all three of us are in New York, right? Like, remember when Uber came out? Like, I remember when Uber came out, right, here in the city, and it was kind of like not a thing, and then all of a sudden it was everywhere, and like the cab drivers were pissed, and the guys that own the medallions, right, the yellow cab, they were angry because those medallions were worth like $350,000 a pop, right? And then Uber shows up, and those things went to like zero, like overnight. I'll never forget. I heard these stories like cab companies owning like 500 medallions, and the guy was like retired, and then Uber comes out and they like just go to zero. Like nobody wanted the medallion. You just go drive an Uber, right? So I feel like this autonomous driving thing is going to be the same thing. Like, someone's going to show up, and you're going to hit a button on your phone, and the cab shows up like they do in San Francisco, and it's like 5% less because you don't have to pay a human to drive you around, right? And like everyone will just do it, and overnight we'll just have half the cars on the street in New York City will be no one's in the car driving.
Well, that's,
you know what I mean?
That's where I think, not to come back, but to complement Clint's point when he was saying it's like GM or Ford or whomever, but it's if you could be the company that is the independent third party that works across all of them, you'll be able to get ahead of a Tesla in this scenario, right? And you're already expecting. We see Revel all over the city, the baby blue Teslas.
Right. Yeah.
You know what? Who's to say we're not getting those trained up enough well enough, sorry, that we can convert those relatively quickly. And probably,
It's true.
Yeah, almost 5% of taxis seem to be Teslas right now in the city for yellow cabs too. So it'll come.
I mean, come on, you know what would happen? All of a sudden, they'd be throwing cars out without a steering wheel. Like that's what's going to blow my mind. The day that I step into a car and there's no steering wheel, there's no driver's seat, there's just
a panic button. That's it.
There's 4 chairs facing each other. You know what I mean? Yeah, panic button and eject button. Yeah, I like that. No, but yeah, that's coming quick, man. I mean, Clint and I talk about 100-year plans and all this stuff. I mean, I have a 6-year-old kid, and I just think like by the time that guy's 18, like there won't be cars with driver's seats anymore. There'll just be a bunch of autonomous drive. You know, I mean, that's 12 years from now. Forget it. There's no more cars with people driving it. Well, there probably will be, but not. Most of them will be driverless, right? So,
I think so.
Yeah, I mean, there's going to be a ton of capital that goes into the space. Let's just put it that way.
For sure.
I'm not really sure who is the winner at this point. I think there's a lot. There's a lot to be decided. To me, what's more important than the data is the distribution. Like I think something like Uber, where they've got the model where they have none of the capex, but they have the vehicles, they have the drivers, they have the customers, and they can leverage that marketplace to figure out supply and demand is more interesting than the data, because I think the data gets commoditized at some point over. Like I think Tesla's done like 1 billion miles driven, but it's only a matter of time between someone else catches up. In my opinion, like the ability to get customers is really more interesting. And I think that we've already seen that Waymo is partnering with Uber for distribution in San Francisco. So it's starting already.
Okay. That's interesting. I could see that. I mean, that makes sense. I mean, especially
who's going to pay for the cars?
Not owning
who's
the car.
Pay for
well, that's going to be the big thing is how you just do the capex on the cars, right? That's going to be the.
Well, I think there's an element here where people think that you're going to buy a Tesla, and then when you're not driving it, you're going to lend it to the market. But the challenge with the market is that people tend to need to drive at the same time. Everyone needs to get to the office around 9 to 10 o'clock. So if you have your own car and you're driving it to work, and then you're lending it to the market after you're at work, nobody needs to go to work anymore. You need to lend it at the time that everybody else is driving. So at the end of the day, and then so that's like in a market where that's a system where people are lending their cars to the market. On the inverse, if there's a system like Waymo where they own the cars, they own the capex, they have a supply and demand problem too. Whereas, during peak hours, they're going to be flying and people are going to be in those cars. But what's going to happen between, 11 a.m. and 3 p.m. when no one's driving? They have these cars on the road. They're not monetizable. Also during the late night hours. So it's just, that's why Uber is so interesting, because they don't have the capex, but they can sit there and say, hey, when the market is hot, we can get drivers on the market, or drivers in the app, and drivers picking up people because we can incentivize them with money. And then when the market is slow, they can not incentivize them and people can be home.
Yeah.
So I think that's really interesting. And autonomous vehicles
I gotta
solve
tell you,
that problem somehow.
If I could go to work at a different time and make a lot of money by letting someone drive my car to the office, I probably would do that. I mean, this is what makes a market. That's what's kind of great about some of this stuff. Like there'd probably be a portion of the population be like, well, I'll start work at 10 o'clock if I can make another X amount of dollars per year.
Yeah.
Just letting my car drive someone to work when I would normally go to work, right? So it could be this is all fun stuff, man. I'm telling you, this stuff is going to be really interesting. I think in the next 10 years, right? We're going to start. This will be one of the things that will happen to us as like a society, right? Where technology is going to have this like impact, and we'll tell our grandkids, our kids will tell their kids, yes, there was a time where people drove cars, and they will all like laugh. Like I tell my kids that phones used to be on a wall, connected to a wall. And they're like, what? Phones used to be connected to walls?
Yeah,
Like,
just wait till we describe what a clutch is. Right?
Yeah, right. Come on, man.
Your
So
freaking mind.
Cars used to have gasoline in them. Like that's crazy. Like they weren't all electric. Like there'll be crazy things like this. That will be said.
Certainly.
I think sooner than later. But it's going to be a lot of fun. So all right, fellas, let's end it there. I appreciate you guys. Thanks for doing this week. All right.
Thank you.
Cheers,
guys.
guys.
Boys. All right.